We have a lot to get into in this video here today, folks, but let me first start out by apologizing. I am sorry for my behavior on the Twitch live stream. It was out of control. I dropped about 100 F-bombs back to back to back to back to back to back to back. It was out of control, and so I do want to apologize for that. You know, sometimes people ask me why I don't go live on YouTube, why I go live on Twitch instead. It's because, you know, not that many people go on Twitch, so I can get away with that sort of stuff, but you know, something ends up happening and then I end up losing it and it goes bad. And so I'm a good boy on YouTube. I don't want them to take away my $20,000 a month I make from YouTube. And so that's why I do what I do over on Twitch and not on YouTube, because I just always end up losing it at some point, right? I will be live streaming Palantir's earnings on Monday. And if you're wondering why I lost it, I ended up losing it because on CNBC, we're on the website, right? And what do they post as their big breaking thing in regards to Meta? Like the only freaking negative thing you could possibly post about Meta. Meta's Reality Labs post $4.5 billion loss in second quarter. Like, there was a million positive things they could have said about this quarter, about the numbers, and they chose to run with that as the headline all over CNBC's website for like 20 minutes after the earnings came out, and I lost it. Okay? So I do apologize for that over there, okay? So Meta, obviously huge position for me, $800,000 plus in the public count. Their earnings did come out. We've obviously got to talk about that. We've got to talk about if this stock is an easy buy now at this point in time. It's up about $30 a share after hours right now, which is about a $51,000 additional gain as of tomorrow, assuming those gains hold, and we'll also talk about if those gains are actually going to hold or not, okay? Cheesecake also reported after the bell. This is a stock I've been buying very actively recently, and it's a position I've been wanting to build, so we'll speak about their earnings if that stock's easy money. Tesla, speaking about easy money, my gosh, this stock has seemed like really easy money. We're up another $16,000 on the stock today. It's just bad numbers, and the stock just goes higher and higher and higher. The bears are pulling out their hair. They're freaking out. They're wondering what's going on here. I'll explain exactly what's going on in regards to good old Tesla. PayPal starting to roll. Is PayPal starting to roll for real now? Yes, it is. I forgot to prep slides actually for this. I just realized. So I was going to talk about PayPal. Moral of the story is, yes, the gains are for real in regards to PayPal. We're going up from here, baby. Nvidia up almost 13% here today. What the heck is going on with Nvidia stock? People are looking at this one like, what? Like how is it up that much? AMD wasn't even up remotely close to that. And AMD came out with their earnings. Nvidia didn't even come out with their earnings. And the stock went up insane, okay? So we'll speak about what's going on there. And then last up here, Chipotle. So I'm starting to lose lots of value on my hedge in regards to this. I was up triple digits on this particular hedge, not even a week ago. Less than a week ago, and I'm starting to lose value left and right. We'll talk about, did I get too greedy here, okay? A lot to get into. Appreciate y'all joining me as always. Thank you for smashing the thumbs up. Thank you for being subscribed. Busy video, a lot going on. It's earnings season, folks. If you're looking to learn from me on a much higher level, bring your game up. Pin comment down there, apply to join a private group, and also get access to 1000xstocks.com. So, Meta, let's talk about this one. First off, revenue by geography. I like to look at each geography and see if those geographies are healthy or if it's only one's healthy, one's bad. You know, for instance, like Starbucks. Starbucks business is not a disaster in the U.S. International Starbucks business is in a complete free fall right now, right? And so every company I ever look into or I own, I want to see what's going on in specific areas if it's an international company like Meta is, right? $16.8 billion of revenue they just did in US and Canada. $14.4 they did in the same quarter last year. $17.3 in the same quarter last year. They did $9.3 in Europe. So Europe's, up almost $2 billion year over year. That's incredible, especially considering the European economy is not that strong right now. Asia Pacific, they just did $7.8 billion versus $6.5 in the same quarter last year. This same quarter last year, they did $3.7 billion versus $5 billion in rest of the world. Every single geography is insanely strong for Meta, despite all the inflation, despite all the challenges in the economy in these different areas, right? Meta is still putting up great numbers quarter in and quarter out. No, something no one looks at it. I know everybody, CNBC wants to put on there, Reality Labs, they lost so much money. But did anybody look and see how much that business is actually growing? It actually is pretty extraordinary. $276 million it did of Reality Labs revenue in this same quarter last year, right? And they just did $353 million, which was 27% growth. So I know that business kind of gets laughed at, but it is actually growing pretty nicely right now, right? Now, if we go ahead and take a peek at this, net income, $13.4 billion versus $7.7 billion in the same quarter last year. The net income's flying 70% up year over year. Diluted EPS, $2.98 versus $5.16 they did. Now, if you watch my Twitch live stream, I told you guys I thought they were likely going to come in with a 5 number, something with a 5 in front of it. Analysts were about 478. And I said that number is likely too low. They're probably going to have a 5 in front of it. And sure enough, they came through 516. Very good number as far as that goes. CapEx, they're spending a fortune on the NVIDIA chips. Obviously, everybody knows that, right? $15 billion plus they've spent so far this year. That's versus 13.4. Now, keep in mind, not all that number goes to NVIDIA, but a huge portion of that number literally goes directly to NVIDIA's pockets, essentially, right? And keep in mind that number is likely going to be even higher in 2025, which is great news if you own NVIDIA stock, right? Family daily active people, 3.07 billion in the same quarter last year. They just did 3.27 billion. So, they're up about 200 million more people are using at least one of their products, which keep in mind, they own Facebook, they own Instagram, and they own WhatsApp. Now, if we go ahead and look at family average revenue per user, very strong. They went from $10.42 of per user back in the same quarter last year. They just did almost $12, $11.89. Very good. Very good. Ad impressions is one thing that is down quite significantly as far as a percent growth on a year-over-year basis. They got 10% ad impressions were up year-over-year, but that's much lower than it was previously. So it's just basically ads being shown out there. However, the price for ads being shown is going up rapidly right now. I mean, absolutely rapidly. Something Meta's doing, maybe they're showing a little less ads to folks to make the consumer experience a little better, right? Or not increasing as much, let's call it that, the ad load, but they're making everybody pay a lot more. That might be something that's actually happening here, right? Because look at this. Average price paid per ad, year over year percentage change. It was up 10%. 10% on a worldwide basis. US and Canada up 9%. Europe, it was up 18%. Asia Pacific up 4%. Rest of the world up 24%. And we got political ad spend about to come. Remember, the big political ad spend wasn't even in this last quarter, right? This ended in June, this particular quarter. The big political ad spend is July, August, September, October, right? And then whatever last bits these politicians have, they'll run it in November. But it's really those lead up 3 or 4 months before the elections actually come in November. So don't be surprised if this number goes up even much higher in the next couple quarters here. Now, if you look at the percentage basis, revenue was up 22% for the company year over year. That's an incredibly strong number. I mean, how many companies, think about the economy, right? Think about inflation. Think about these companies reporting. I look at just a ridiculous amount of earnings reports. I can't tell you very many companies that are growing revenue 20% plus right now. Meta's one of very few. That's an incredibly strong number. And the earnings per share is off the charts, 73% up. Diluted EPS was up, right? 73%. Net income was up. That's extraordinary number. Extraordinary number. Now, before we get into projections here and kind of what I'm thinking in regards to Meta stock, right? If you watch my channel for years, I told you they hate Zuckerberg. Mainstream media hates Zuckerberg. And so if you wonder why they like to run with a lot of negative headlines, they also obviously have turned on Elon Musk the last couple of years. Now, why do they hate Zuckerberg? And why do they now hate Elon Musk? So they hate Zuckerberg because he controls so much of the internet. They now hate Elon Musk over the last couple of years, not just because he went to the right. A lot of people assume it's only because he went to the right. No. It's because not only did he go to the right, but additionally, he bought X. X is a huge competitive threat to all the mainstream media. So is in Facebook, so is in Instagram. For instance, when I heard the news, somebody, I don't remember if somebody, I think a lot of people had texted me, Trump got shot at, right? What do you think I did? Did I turn on my TV and said, oh, let me put it on CNN, MSNBC, Fox News, NBC? No. You know what I did? I went on my phone and I went to X. Because I knew, boom, as soon as I pull it up, I'm going to be able to see the shooting right there. Sure enough, I saw it, right? That's a problem for mainstream media. It's a huge problem. And so this is why they hate Zuckerberg. This is why they try to dig up any dirt, or if they can pitch something as a negative, they're going to try to pitch it as a negative. And this is why they do the same to Elon Musk now. Elon Musk used to be loved, right? But now he's a competitor to all the media out there, right? If you aren't watching Fox News, if you aren't watching CNN, and you're using your time on X or Facebook or Instagram, it's a problem for them. Now they don't make as much money, right? But you know who does make money? X makes money now. Facebook makes money, right? Instagram makes money. It's a problem. Now, let's talk about some projections here. It's very important for everybody to understand why certain things are pitched certain ways, okay? Very important everybody understands that. So here's some, listen, the company just grew revenue 22% and 73% net income. Let's assume they could keep that up, which they're not going to be able to, okay? But imagine they did. If they could keep up that pace of growth, this stock, if you valued it somewhere between a 20 and 30 PE, would be somewhere between $3,200 and $4,800 in 2028. They're not going to be able to keep up these sorts of growth rates they have going on right now, but it is extraordinary to think, like, what if they could, okay? What's realistic growth rates I see for Meta, and kind of where do I see the stock? Well, Meta's Mr. Easy Money. This stock's easy money. I've been calling the stock easy money for years, and sure enough, it's been easy money since like 2018, right? Like every dip's always been a buy in Meta. Still to this day, every dip's a buy in the stock. Every one, okay? Revenue, I have them doing about 15% on average a year, which puts them somewhere around, we can call it a little under $300 billion of revenue, 2028. And then I have them doing about 20% net income growth, which obviously is a crazy deceleration from where they're at right now, which is 70% plus. I think they'll even out to about a 20% on average a year for the next many years, which puts the stock somewhere between about $750 and about $1,100 come 2028. That's why this stock is very, very easy money, right? Because those aren't even wild projections. I have their revenue being down considerably from where it's at. I have their net income being down considerably where it's at, right? And yet it's still 750 to 1100 plus. That's very attractive for a stock, right? This is what a grade A income statement there looks like, folks. If you want to ever look at a grade A income statement, that's what it looks like. Extraordinary numbers. They keep all their expenses in line in a very impressive way, right? CapEx is something totally different. CapEx doesn't count on an income statement, right? Because it's spending on like infrastructure for your business for the long term, right? So you don't count that on an income statement. That's more of a cash flow related thing, right? This is phenomenal. Their income statement is phenomenal. I mean, just extraordinary numbers this company is putting up here. If you look at their balance sheet, $32 billion plus in cash and cash equivalents, $26 billion plus in marketable securities. These numbers are phenomenal. Now, this is what a number one stock looks like. When you think about what is my biggest position in my portfolio, this is what it looks like. In order to have a stock be a pillar of your portfolio, your steak, your chicken, and then you got your side dishes all around your entree there, you need to have something that is incredibly solid, like phenomenal, like top tier to be that main entree. And that's Meta stock. You got a grade A management team, right? You got a grade A business model, you got a grade A income statement, and you got a grade A balance sheet. All in the same company. That is what a number one stock looks like, okay? If you want to build other positions into a number one stock that don't have these sorts of things, you can do that, but you're just not setting your portfolio up in a good position. You can always have those sorts of stocks that still have a lot to prove, right, and might have crazy upside. Have those as side dishes. I have those stocks as side dishes, right? But my main course, where I got the big money, that's got to be on sure things. That's got to be insanely high risk rewards. That's going to be the sort of stocks that I don't care if there's inflation, recession, no recession, I don't care what's going on. These companies are going to be strong. That's Meta. Incredible. Now, what about the stock price? Where are we going from here? So, I got very suspicious on the Twitch live stream today because I looked at options for Meta. And I was on there and I was like, if I was to play short-term options on this, which a lot of people like to play short-term options given the stock's about to do an earnings, right? I said, I'd be looking at something like a 475 strike. And then I looked at the 475 strikes and you had to pay $19 for those babies. And I said, And right then and there, I was kind of like, I think they're going to screw everybody. I think the market maker is going to screw everybody in this situation. You got to understand the setup into these Meta earnings. You had Google go down last week when their earnings came out. So Google and Meta, a lot of times these stocks kind of follow each other around. So you had a lot of people, I guarantee you, who are thinking, oh, Meta's going to go down on their earnings. There's been weakness in big tech recently. We had a rally day today. It's going to go down over the next couple days, and I'll be able to make a bunch of money on the put side because Google went down, right? And so you would have had that put side there, right? And then on the call side, I think you had a lot of people that had the belief I did that they're going to come in with very nice beats, right? And their earnings are going to be very good, and that's going to be a good thing for the stock. But the problem is you had to pay such a big premium on many of these options that you need the stock to be like 5, 10 plus on a lot of these options to have really made any sort of real money in regards to this, right? They might end up screwing everybody over this next 48 hours, where all the put option folks are going to lose their premiums, right? Because if the stock goes up, even if it's up a few percent, if you're out of the money on puts, which you're likely out of the money, you just lost everything. Then on the call side, right? If this stock doesn't really explode to the upside, it doesn't make that 10, 15, 20% move, all these call buyers are going to get wrecked. They're going to get wrecked. You got to understand there's a lot of people today that were buying 500 strikes, 515 strikes, 525 strikes. If this stock doesn't explode to the upside, those people get absolutely wrecked as well, and then both sides are just destroyed. And the only ones that end up making money in the end are the ones that were selling those calls and puts to folks, right? And the market maker in the end, right? And so, I don't know. I just have a funky feeling. In regards to Meta, the stock is heading to 550, and then it's heading to 700. But I wouldn't be surprised if they destroy everybody over this next, 48 hours in regards to the call and put side. Don't be surprised at all. I've seen it happen so many times in the market. It's ridiculous. It's insane. And that's what differentiates me versus somebody else. I look at a Meta and I'm like, I think they're doing $5 plus. I think they're going to beat, right? But I won't go out there and say, you know what? I got to go buy a bunch of calls on this. Let me go buy $5,000 in calls on this, $10,000, whatever. I've been around this game enough to know, nah, there's tricks up their sleeve. This is probably going to end up being a trap, right? That's just my view on that. And I'd much rather say if I'm going to do $5,000, $10,000, I might as well just buy more shares of the stock, right? Because then I'm not caught up into this game of like, oh crap, what if it goes up some? Do I get out right away, right? Or do I try to hold, hope it goes up more, and then it ends up giving back the gains over the next couple of days, and then next week it goes flying, right? And I miss out on the whole opportunity. You got to play smart. Cheesecake Factory. So this stock's starting to do us well. We're up about 19%. Let me be very clear. I want the stock to go down. Very clear about that. Now, as far as locations, they're up to 216 Cheesecake Factories. They're up to 39 North Italias and 33 Flower Childs. I think they have potential for about 200 or so North Italias. I think that has just as big a potential as Cheesecake Factory. Flower Child, I think they could probably go to like 400 locations. The more I view Flower Child, the more I'm like, oh my gosh, the opportunity there is insane, okay? And you think about how many Chipotles are in the United States, about 3,400 right now. They're going to 4,000 to 5,000 Chipotles in the United States. Like, I can see a day when Flower Child has, 10% of Chipotle locations, which would be about 400 or so, right? Now, we got a problem. Look at this. Comp restaurant sales for North Italia was only up 2% year over year. That's versus 8% at the same time last year. Keep in mind, inflation's above 2% right now. We're at 3% inflation on a CPI? So, moral of the story is, North Italia's comp was under the CPI number. Not good. But it gets worse. If we see FRC Concepts here, by the way, as far as Cheesecake Factory, comps are up 1.4%, a pretty low number as far as that goes as well, right? But FRC Concepts, that was down 6% as far as comp store sales. I smell recession. You got to understand about FRC Concepts. A lot of those concepts, by the way, are in Arizona specifically, in Scottsdale, Phoenix, right? And in regards to those FRC Concepts, a lot of those FRC Concepts are a little higher end, not like you got to be a baller to go there, but a lot of their entrees are in the, I would call it the $20 to $40 range, okay? And a lot of those concepts count on alcohol. A lot of those concepts are set up very well for people to go there and have drinks as well, okay? They have a really nice ambiance. They're the type of place you want to hang out for a while and actually have drinks, and very elegant, right? Listen. Have you guys heard some of these liquor company numbers? They're horrible. I was on the Diageo, which they got like a monopoly on so many different liquor brands. I was on their conference call the other night. I don't even own the stock. I just listened to some of these conference calls. It wasn't good. It wasn't good in regards to their numbers. Look at Sam's numbers, not good. alcohol sales are not good right now. Even if you hear out of Louis Vuitton and their high-end champagne brand, even they're not doing good. If people don't really have like that much money, they're going to cut back on alcohol. So when they go to a restaurant, they might still go to a Cheesecake Factory, North Italia, wherever, but they might not be getting those mixed drinks that they might have gotten a few years ago. Because at the end of the day, they're like, I don't have an extra $15 a drink to spend, $12 a drink, $10 a drink, right? Another $8 for a beer. And they look and they'll say, I'll eat and I'll drink a glass of water. And so that's a problem for a lot of those different concepts there, right? This is a bad dynamic. Texas Roadhouse, for instance, comps have been phenomenal, but they don't count it nearly as much as that. Texas Roadhouse more family friendly, right? If you go to Texas Roadhouse, you might get a beer, but to be honest, it's more just about the food in general. But when you go to some of these a little more expensive places, you want people to spend $30 on drinks while they're there, $40, $50 on drinks. And if they don't have the funds to do that, it's going to hurt your restaurant sales in a substantial way. And that's exactly what we're seeing play out. And I'm telling you, that smells like recession. I'm going to be completely honest with you guys. Now, that's not going to last, by the way. That's not going to last long term. But that is something we're going through right now, which tells you exactly why Jerome Powell basically said they're cutting in September. He didn't directly say we're cutting in September, but if you know how to read through all the BS and put all the pieces together, basically Jerome Powell said we're cutting in September here today, right? So that's recessionary, folks. I'm going to tell you that much. And keep in mind, these FRC concepts are the most well-run, so well decorated. The food's phenomenal at all of them. They get such high ratings. So this is like the pinnacle. So when the pinnacle's having a little bit of a rough time, I'm telling you, that smells like recession. Now, in terms of their income statement overall, this is a B plus income statement here. Revenue $904 million versus $866 million. If you look at food and beverage costs, they dropped that year over year. Very impressive. If you look at labor expense, they also dropped that. How many companies are able to drop labor expense right now in this industry? That's incredible. Other operating costs and expenses was up slightly, 26.4% versus 26.2% as a percent of revenues, right? G&A, they dropped that to 6% of revenues versus 6.4% in the same quarter last year. Depreciation and amortization roughly in line, pre-opening costs roughly in line, right? But they actually dropped expenses to 93.5% of revenues versus 94.5%, right? That's impressive, especially considering likely liquor sales are bad right now. And guess where you really make your profit? If you've ever run a restaurant in your life, right, and it has a liquor license, where do you actually make a lot of your profit? Liquor. You want people to get beers. You want people to get mixed drinks because you can sell those for $6, $8, $10, $12, right? $15. And it's not like it costs that much to put into it, right? No different than Taco Bell loves you to buy a Pepsi while you're at Taco Bell. You know why? Because they charge $2.99 for it. And you know how much it actually costs Taco Bell? Between the cup cost and the actual Pepsi that goes into it, we're talking about max 20 cents. So what's their profit margin on that? 90% plus. 90% plus is what we're talking, right? So eventually liquor sales will come back strong again, right? When people get in a better financial situation, inflation hasn't sliced and diced them for 3 years, right? And when that does happen, you're going to see Cakes. You're going to see Cakes net income, which is 5.8% of revenues right now, which is very impressive, 52 million versus 42 million same quarter last year. That's going to go up a lot more. That's going to probably go to somewhere between a 7% and 9% range, which is where Cakes starts to get a lot of fun. And then revenues will obviously be increasing as well, right? Now, even despite this horrible consumer backdrop, bad consumer environment, horrible consumer sentiment, the worst in decades, still putting up great numbers, right? So here's the deal. I'm buying every freaking Cake share I can get in sight over the next 12 months. Every share I can get my hands on. The consumer sentiment numbers being horrible, consumer weakness being bad, it's not going to last forever. All that stuff is temporary. No different than, booming times where it seems like, everybody wants to go out to eat and get drinks and all that stuff. That doesn't last forever, right? And you have these ebbs and flows. And we're going through kind of a downflow in regards to the restaurant sector right now. That's fine. I will pick up every share of Cake because Cake's going to come out of this way stronger than their competition. And they're going to go boom, 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 right? Now, additionally, when it comes to valuation of this one, it's just incredibly attractive. Forward P at 12, 2-hour forward P 11 versus Darden Restaurants, which Darden Restaurants I don't think is going to grow even remotely close to as much on revenue and bottom line as Cheesecake will 2025 through 2030, right? Texas Roadhouse, so much respect for Texas Roadhouse. I used to own the stock. Phenomenal company, and they've been running better than Cake for a few different reasons, as I spoke about earlier. But I don't see Texas Roadhouse outgrowing Cake, revenues or net income, 2025 through 2030. I don't see it happening. I'm not convinced in any of the other, I'm not convinced in Bubba's 33 or Jaggers in terms of what Texas Roadhouse does there. I am convinced in North Italia and Flower Child, right? And then Cake, obviously Cheesecake Factory brand and Texas Roadhouse are always going to put up their good numbers. Those are just like staple big restaurants that everybody knows, right? So that's what makes Cake very attractive. I'll be buying every share in sight. Short sellers are pulling out their hair. They're looking at Tesla like, how? How does this stock keep doing good? The numbers aren't good. They're getting frustrated in regards to this one. They don't understand what's about to happen here, okay? Tesla's going to be showing off the $25,000 car not too distant in the future, right? And this is a game changer for the company, for the fundamentals of the company. We're not talking about this is a game changer for the stock price. This is a game changer for the fundamentals of the company. A lot of people don't understand how big this vehicle is going to be. It's going to be insane. This is like, if Model 3 and Model Y were kind of like an iPod moment for Tesla, the $25,000 vehicle, in my opinion, is the iPhone moment for Tesla. Like, this is beyond huge for this company. I think the biggest question is, what are they going to design it like? Are they going to design it like a mini Model 3, right? I think it's probably going to be a two-seater, by the way, which is also going to simultaneously be their their main robotaxi vehicle, in my opinion. But yeah, I'm curious, are they going to try to make it like a miniature Model 3, or are they going to try to make it something like a mini Cybertruck type design where it's more squared off? And the reason I kind of get thinking about this as a potential design is Model 3 was the building blocks for Model Y. And then Model Y was very easy to scale out and became incredibly profitable because they had already done the work on Model 3. And I'm just wondering if Elon's got a bigger vision there and the team's got a bigger vision about Cybertruck was actually just a thing to get a ton of marketing attention and also put up really great sales numbers, obviously, over the coming years because there's so much demand there. But maybe it was additionally to create kind of that sort of design so they could get used to producing something like that and then come out with a $25,000 car that has some sort of design elements in that. I don't know. We'll see. But people don't get it. They're like, how does the stock keep going up? They'll see. They'll see soon enough, and then it'll all make sense, right? NVIDIA, what the heck's up here? Stock goes up 13%. Morgan Stanley comes out with a note here today, about, NVIDIA is this and that. I'm like, is no one paying attention? Like, NVIDIA is all that, right? So in regards to the stock, people flood out of it, and then they flood right back in. And people want to own NVIDIA. People want to own NVIDIA. This is a must-own stock. You got every single big tech company on the planet spending more in 2024 than they spent in 2023. They're going to be spending even more in 2025 than they spent in 2024. If there's a major recession, they might cut back on 2026. If there's not a major recession, they're going to spend right through 2026, even bigger numbers in 2025. And so at the end of the day, people are going to keep coming back to NVIDIA and want to own that stock and want to own that stock. And you see a sell-off, and every single major sell-off ends up getting bought in the stock. And it's not like this is the first sell-off we've had in the past 2 years. In the past 2 years, as NVIDIA's made this incredible run to the upside, right, we've seen many sell-offs along the way. And yet, boom, next thing you know, people are right there to buy it. And they'll use whatever excuse, but I'm just like, the numbers are incredible. They're going to keep coming back to this one. Chipotle, did I get too greedy here in regards to this one? We're starting to lose a lot of our gains in regards to Chipotle. If the market continues to go risk on, we're going to lose even more gains in regards to this one, right? And I feel conflicted. I feel like maybe I got a little too greedy, but I also have an issue. I have a big problem here, okay? I have a big problem. Where do I put the money? If I sell out of all my Chipotle puts, right? And I move out of that position, where do I put the money? Where do I put it? You might say, okay, put it in a savings account. I got plenty of cash. I don't need more cash around. Okay, put it in long stocks. I got plenty of long stocks. I don't need more long stocks. It needs to be there to protect me from downside in the market. So when I look at something like Chipotle, I'm like, where would I put my next hedge? Like, where's my next hedge at? I was thinking about something like a Wingstop, maybe, potentially, right? But I don't know where I move next. I want to move into a lot of the home builders, like the Toll Brothers and some of those, as far as buying puts. But I don't know if I can do that quite yet, because a lot of those companies are putting up phenomenal numbers, and they just keep putting up phenomenal numbers. And I'm like, I don't know if I can go against those guys right now. I already tried it once and lost, and I'm like, do I want to go against them again right now? I'm not sure about that. There's going to be a time to go against home builders, but it might not be till the end of this year or maybe next year or something like that. So I don't know where I put that money. So maybe I did get greedy in regards to this Chipotle situation, but also it's got to be a plan with where the money goes after you sell out. It can't just go to cash. No. I have cash on the sideline already for reasons. So it's tough, man. I don't know. Let me know if you think there's some good hedging opportunities out there that are, if this market really goes down in any substantial way, certain stocks will go down a lot. I like to bet on stocks that even in an upward market could still go down, though. That's the thing. I don't want to just bet that if the market goes down, this stock will go down. I want to be in a stock that even if the market went up, it has a decent probability going down because it has some sort of fundamental issues there, right? So I'm in a little bit of a pickle in regards to Chipotle, but we'll see. We'll see how big the burrito is when it's all said and done, right? All right, guys, appreciate you joining me as always. Thanks so much for being there. Remember, stay focused on long term, guys. Stay focused on long term. There's a lot of earnings coming out. There's all this news, this and that. Everybody get caught up in the short term. Focus on long term, where your portfolio is going over the next several years and not just where you're at right now, right? If you're looking to take your investment game up to a much higher level, join a group of investors that are focused on the long term, like-minded people. That's what we have in my Discord chat. A lot of people with 6 figures, 7 figures, 8 figures in there. These folks are focused on the long term in regards to stocks. We're always talking about stocks. The amount of discussions and high-quality discussions that go on a daily basis is phenomenal. And so if you want to join a group like that, you can click the pinned comment, apply to join us in there. Get out also access to all my course curriculums plus 1000xstocks.com. Much love and have a great day.